Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, July 23rd, 2023. So Friday, we kind of just saw a muted market. It's the bulls just look exhausted right now, and the chart I'm showing you right now is the VIX, and this would probably be really the most concerning chart if you're just a perma bull right now because we're at levels right now that we haven't seen since the S&P were at new all-time highs. And every time we've come down to these levels, I mean, we've seen a spike in volatility. So we have bullish divergences here, very overbought. And if we just saw a move up to the 200 week moving average, that's almost it's pretty close to a 80% move higher. So it's this is the concerning part right here is this because nobody's really worried about the market's going down, and the thing is that nobody really knows why they're up. The economy is not going in the right direction. Inflation has come down, but it's still elevated and sticky. And we have sentiment that's reaching extreme bullish sentiment readings. So everything is there. I don't know what is going to be the catalyst for the drop in the markets, but something's going to come and it's going to shake the bulls out, and we're probably going to see a little bit of a panic sell off just because. There's so many people that are just long this market, and this is typically how how tops are made, and as well as lows, is when everybody's bearish on the market. So if we take a look at the S&P, you can see we don't have any bearish divergences right now on the weekly chart. So but what will probably take place is you get a move like this, that comes down, and this is a 200 to 300 points on the downside. And if we're just going to go down to the 50-week moving average, we're looking at a move down to the 4150, which also it's matching up with a 50% retracement from this low to this high. So it's this is kind of what I'm expecting. I'm not looking for a crash in the market, but we could see somewhere a 400 point drop that hits in a very very fast manner, and that's kind of what I am anticipating. If we take a look at the daily chart, you can see we do have bearish divergences there. We have bearish divergences on the stochastics, and we're really trading within this this bearish wedge. And if it's going to follow the pattern, we're looking at a move coming anywhere from the 4100, 4080 area down to the all the way down to the 3800. So this would be the pattern targets. Now on the as far as support, really the bears, they're going to have to get it through this 44, 42 level to get any momentum going. Now there is support here at the 43.76, and then more support down at the 43.26. And again, this is really what the bears are going to have to get through to start seeing, because once they get through these levels here, there is no support until we get down into these the 4160 level. So this is the important support zone right here. If the bears can push through it, then we'll probably see a test of the 200-day moving average, 4150, and that's really about what I'm looking for. For this move, maybe a little bit deeper than that, but it's all a matter of the velocity of what it takes to get down there. So if we take a look at the 60-minute chart, again, yes, we have bearish divergences. Support, it's basically what I was just telling you. So we have the 40, say the 4500 is the first support, but also another thing that I've been explaining are these gaps that are left below, and you can't really build a solid foundation to the upside when a majority of the moves are coming on gap ups, because the foundation is made of quicksand, and once it starts going, all the blocks are going to start falling. So we have bearish divergences on the 60-minute chart. Again, 4,500 is really what the first thing that the bears need to get through, and if they can get through this, then we're probably coming down and closing the gap down at the 4450. And as I said, this is the important the 4320 is the important support that the bears need to push through. 15-minute chart, again, we have some bearish divergences in place. So it's on the upside. The bulls are probably going to have to get it through this the 45.55 level. If they do, then they're probably coming up and testing these highs. So we want to see the bears be able to get through these support levels right at the, I'd say the 45.25, 4500 level to start seeing that maybe the bears are going to be in business right now. But there's just not a whole lot of sellers. But the thing is that, the buyers are looking pretty exhausted right now. So I would be very, very careful. Just jumping on the long train ride because this thing could turn anytime. So the next chart, this is the AU. This is what I showed you when we were coming down, and I said, these are the support areas that you want to be buying it. Typically, I do not. I don't pick stocks, but I do like gold, and it's not even for inflation reasons. It's more for World War III reasons, and I just think that NATO is not going to stop until they look to cause World War III, and that's where gold will shoot higher, and why I've been buying it on my own. But you can see once we got down to the support level that I was talking about, these lines have not changed. I've had them here for a couple months now. We had a nice jump from the 1950 all the way up to the 23. I believe we're taking out these highs, so there's still plenty of room on this one. We do have a couple gaps that might have to get filled, so use weakness to really build your position, and then you'd really just want to put your stop below the 16 here, and if you get stopped out, you get a little bit of a hit, but the upside, say the risk reward on this one is very good. So let's see what plays out next week and tomorrow. Have a great night, a great day, and I will talk to you guys in the morning.